if you're going to go into this, you have to find the best options for you. Find the best mix. As I said last week, no one strategy works for all. No one size is going to fit all. There can always be a mix and match of the strategies that will go into it. There can always be a tweak from time to time in terms of direction that it is that you're going at any point in time. And there may also just be a complete shift at a certain point in your journey because you've achieved the first part of it. You want to now go into the next one. And the next one requires for a different way to actually So now let's explore some of the investment strategies that it is that you can start to use to do this. Now, I would like to first explain what some of these strategies are from a high level. From a perspective of what it is that you're going to be getting out of any of these things, you could, one, be getting value. 2, you could be gaining growth. 3, you could be gaining income. Now, this doesn't mean that any particular option or, opportunity cannot give you all 3. But at every point in time, one of them or 2 of them are going to be more predominant in what their values or their outputs are going to be. So let's think about somebody who is looking to get into an off-plan opportunity, for example. Now, an off-plan would give you value because you are going into the off-plan at the cheapest price it's ever going to be. That's from the beginning. The cheapest price it's ever going to be, which means that when it's completed and people are saying, oh, they got theirs for 10,000 naira, for example, you'll probably be saying that you got yours at 5,000 naira or 6,000 naira. Now, look at that in terms of value. You are already getting a whole lot more equity from your investment versus somebody who's going to be getting in at the end. Now, that's it for off plans. That's just an example, right? Another thing that it is you're going to be getting with, that you could be getting with off plans, would be the opportunity for you to grow your portfolio exponentially. So let's assume that you're also somebody who has quite an amount of cash and you're able to not only do an off-plan, but you're also able to take on multiple units in that off-plan project. You go in and the product is priced at, say, 5,000 naira instead of 10,000 naira that will be when it's the end. You have 10,000 naira to start, and you actually spread your 10,000 naira across 2 units. Now, doing this means that you are going to have to continue to pay the difference for the units. But what that also does for you is that it means that you have gotten something, an asset that's going to be valued at 20 at 10. Now, doing that also means that you have the potential to then earn value, income, and growth. So, this is one of those times where I say that one option could actually be giving you all 3. Now, how does this work? This works in the sense that you've started an off plan and you've bought 2 units. Your 2 units, you've started out, you got them at 5,000 naira each. The potential for each of them to become 10,000 naira by the time they're completed. And sometime before they're completed or when they're completed, you then decide, say, you want to sell one. Selling one means that you're going to be selling at the cost that you acquired the 2 of them, which means that you have literally bought the second one for free. So doing this gives you income, gives you value, and it ensures that you have grown your wealth because you have let go of that one property to get back the cash that you had used to buy the 2 of them. So the other one right now is fully paid out just because you sold out one, but you have cash that you can then plow into another project that you could use to do almost the same thing. Now, what we've also found is that people who tend to leverage on this strategy are also people who, over time, find that they keep building up the cash that they can use to do this. So the amounts that it is that they tend to have in terms of, or the rate of growth that they tend to have in their own portfolio tends to seem quicker because they seem to be getting out with a lot more than somebody who's just doing it one way or two ways. And these are just some of the things that you need to be able to understand, which is also why I say understanding how much time it is that you have to be able to achieve your goal would help us to determine what it is that you need to do if and when these opportunities present themselves. So now that we've talked about the house, we've talked about some of the what's, and I've shared about, at least 2 strategies that it is that you can do. Let me share with you a 3rd strategy, and this would apply to people who don't have all the money to be able to acquire the properties. So think about real estate as a business. If you were going to go into business with a friend or a group of friends, and you found out that, it's going to cost you 15,000, for example, and you say you only have 15,000, but you still want to be able to do this business. What you will then do would be that you would go out and look for other people who are interested, and then you guys will come and do it together. That will be the play. So instead of you needing 15,000 naira cash, there's a tendency that 1 or 2 of the other people that you will be bringing in would have the technical know-how that you wouldn't have paid for to be able to do that. And in that case, what we're looking at is what we call sweat equity. You are coming in with cash equity, and then somebody else is coming with sweat equity, and then you guys move forward. Now, with real estate, there's almost no sweat equity that comes when you are on the investor side, per se. I mean, without going totally lowbrow, that I don't want us to go into today to avoid confusion. But when you are looking at real estate, you should look at it like a business. Think about it and say, okay, I have this amount of money. I can put it into this investment, and then I can also look to getting the outputs at the end. What that does is that it gives you a leg in. We call it co-investing. And when you are co-investing, it means that you are buying into the total value of the deal, but in a smaller fraction. Some people call this strategy fractional investing. I call it co-investing. Why? Because I think it's so much easier, and it helps depict the meaning of it easier. But whatever it is, just think about it like that. Think about the fact that you are getting started. Getting started means that you are also having a leg in. You're able to be eligible for some of the results and dividends when they start to pay. And you are also ensuring that you at least are getting started on the journey. Half ready estate is better than none. I also say that if you're able to get 20% of 100% of dividends that are coming in, you are way better off than somebody who is getting 0 naira on 100% of an investment that you didn't do. So the question then becomes, if you think you're an investor, how is it that you're not getting started on investing just because you think you can't own it? The fact that you want to be able to earn money would almost always supersede and mean so much more than if you say that, that you're just waiting to be able to acquire and own the property all by yourself. So that is one strategy that anybody could start to use for their own investment plan. You could literally take all or any of these ones or 1 or 2 of these plans, mix and match them to be able to make it work for you. What we're finding today is that a whole lot more people probably cannot afford to do this all by themselves, and that's another reason why we're saying co-invest, get started. There's this real need for housing, there's a real need for real estate investment to be able to start, especially in the residential market. So you can start to create the money that it is that you need to be able to buy your own house by starting by being an investor. Don't wait for you to say you want to buy an old real estate. Start by being an investor so that you can become a landlord, an investor, and an owner of real estate that you can probably live in, or you can totally call your own, because all the paperwork will be in your name. So how is that for leverage? That last point is one of the easiest, smartest ways that you, as somebody who's investing in real estate, can start to leverage what you have to get what you need. Sometimes people think, that they have to wait till they have the entire lot. Don't be one of those people. Get started. In getting started, what you also are doing for yourself is that you're becoming more knowledgeable. And when you are more knowledgeable, you also have the opportunity to probably go into deals where all you have is the information and you are helping them to be able to do it. Now, this is where I say that people can strategically get involved in real estate. If you're that person who you have a network of people who are interested in real estate, but you have the knowledge, again, that's the technical know-how, you are going to be able to get yourself involved in deals without actually putting down your money. So this last strategy I just mentioned is one that we talk about, and we say that it is the no money down investment strategy. It's perfect for people who truly understand how the investment can work, or they can manage and work through the details. Now, if that then is the case, then you would see that that's not the strategy that just anybody can get involved in, because there will be risks, there'll be opportunities, there'll be possible losses, that you have to be ready for. And if you're not ready for them, it could be quite bad on you mentally, socially, psychologically. So it's not something that you should play with. So I implore you, you can understand it, you can learn about it, you can know that it exists, but please don't do it without the guidance of somebody that understands what it is that you are talking about, or we're talking about, or entire value chain of the investment cycle. And also, don't do it before you're ready, especially this last one. Don't do it before you're ready. I know I probably said, do it before you stop, before you're ready, stop before you're ready. Don't start this one, the fourth one, before you're ready, because it can have very dire consequences where you would even be regretted, and you would say, oh, but Lerato, you said, I don't just say. There are always conditions to it. So that's my disclaimer. But if you're willing or considering going into a deal like that, always know that you have me. You can just send me a message and say, Lerato, come help me to do this. I want to be able to help them do this because I have the knowledge. You've told me a bit about it, but just come and look over my shoulder, and I'll be really happy to do that and help them watch you also grow your own knowledge base and portfolio. And having said that, I want to also reiterate on the fact that if you're going to go into this, you have to find the best options for you. Find the best mix. As I said last week, no one strategy works for all. No one size is going to fit all. There can always be a mix and match of the strategies that will go into it. There can always be a tweak from time to time in terms of the direction that it is that you're going at any point in time. And there may also just be a complete shift at a certain point in your journey because you've achieved the first part of it. You want to now go into the next one. And the next one requires for a different way to actually start to apply. These are things that it is that you're going to be able to do, or you should be able to do, and you should actually be doing when you are tailoring your investment strategy to suit you. Remember, you are the person that matters the most when you are crafting your investment strategy, because you are the one who has to be able to earn that money. Not me, and not the developer, but you. At this point, I want to say a big congratulations to you for mastering the first step through which it is that you can actually start to tailor your investments to work for you. Now, if you're this person who has said, okay, so you learned all this, you want to actually see how it works, don't take now. This is not the time for you to now go and be thinking about it and saying, how do you make it work and all of that. Let's get you started almost immediately. And I would implore you that you go check out our core investment opportunities that are available at this website that's shown on the screen. You would also find it named and listed in the caption. And all you have to do is just click on it in the caption, so then you can go to the platform and find the opportunity that is currently available. Now, we know that there's no better time than now. So take now to actually get started. Whether you are looking for something that's going to work for you anyhow, the bottom line is the fact that you first have to convince yourself that you can do it. So get started today, not tomorrow, today, right now. Click on the link, go pick an offer, and subscribe as much as you can, or as little as you can, and just get started. Remember, you being able to understand how it works, you being able to know what the details can be, is always going to be the first step for you to being able to grow. As people, we also know that when we are born, we're started out as kids. When you're a kid, you first need to know how to be held in your mother's arms. Then you have to know how to crawl. Then you have to know how to walk before you can actually start to run. Think of the real estate investment journey in that same manner and figure out where, why, and how it is that you want to get started. But as we're going to do that, check out the Coinvestment offers that it is that we have for you. Until next time, I remain your most trusted real estate investment broker and friend for wealth creation. Adios.